Up next, we have a great compliance fireside with a couple of folks here. So this is going to be hosted by our Chief Customer Officer, Ore Phillips. Welcome back. And joining Ore is Ian Lee, who's part of the founding team at Merkle Science, and currently leads the Global Partnership and Strategic Accounts team at Merkle Science, which is a predictive cryptocurrency risk and intelligence platform. A qualified lawyer in Singapore. Oh, I didn't know that. Nice, man. As part of his role, Ian regularly conducts training on the topic of crypto compliance, crypto forensics for regulators, law enforcement, and corporate enterprises. Frank, oh man, I'm sorry. Badalamenti. All right. Frank Badalamenti is a partner at PwC's Cyber Risk and Regulatory Platform and Data Risk and Privacy Practice. He assists digital asset ecosystem participants in strengthening preventative and detective controls and in performing investigations, asset tracing, and recovery. Frank is a certified anti-money laundering specialist. That's cool. Certified financial crime specialist and certified fraud examiner. Thank you guys so much for having me. All right, take it away, buddy.
Awesome. Awesome. Thank you, guys. I like to refer to Ian as a recovering lawyer. But no, fantastic to be here again, and really appreciate you guys joining the panel here. It's such, I think, a broad and unique topic, so we will hit where we can and where we have expertise, and I'm sure there'll be a lot of more insight coming post this. I think I kind of look at this session as maybe a little bit of a continuation of one of the prior sessions on Ready, Set, Audit. I know compliance is it's a different topic from audit, but one of the things that was mentioned in the prior session, which I think applies here, is when we think at the industry level, right, one of the evidences of maturity as an industry is that there's semblance of what compliance means. There are people complying with stuff, whatever that stuff is, and they're getting audited and all of those pieces. So I think it's an important topic to think about from, it might not be front and center for finance and accounting. Maybe it is, maybe it isn't. I'll probably pose that question soon. But it is an important topic as an industry to say, we are getting to maturity and that sort of thing. So it's an exciting topic to talk about here. So let me start with that. Frank, I'll start with you, and I'll ask the question that you kind of should not ask about compliance, but I'll ask, what does it entail? Like, what is it all? It's broad, it's narrow. Give some context here for us to have a conversation.
Yeah, I can try to do that with a few brief thoughts. First of all, thrilled to be here. It's great to be back in Austin year over year. So in terms of what does compliance entail as it relates to digital assets, I mean, the way that I see it, it's really having a program that is built sort of by design in anticipation of all the risks that could arise in providing products and services in this space, and doing it more in a proactive manner rather than in a reactive manner. And so it really starts with some of the basics. I mean, there's a lot of really basic fundamentals when it comes to building and deploying a compliance program. So it starts with conducting a risk assessment, understanding the risk profile for each product that you intend to offer, your customer base, the jurisdictions that you operate in, the third parties that you interact with, the counterparties that your customers may interact with, and understanding what the risk profile is, then understanding what are the regulatory requirements and expectations, in the different jurisdictions in which you operate, whether those are countries or states or provinces. And then once you have that risk assessment, then it's moving to understanding, well, what are the controls that you need to have in place, both soft controls like policies and procedures, but also technical controls like detection systems, screening systems, things like that. What controls do you need to have to then mitigate each of those risks that you inventoried? So those are critical, and then that would involve then identifying some technology, either homegrown or off-the-shelf vendor technology, like blockchain forensics tools that can help, operate some of those controls. And then the rest of it is just building the other elements of the program. So having like an organizational structure, a compliance officer, training, some sort of independent review or annual, audit performed by a third party. And then, the ability to report to authorities, when there is confirmed suspicious activity. So, it's the same sort of basic elements that a traditional FI would have, but sort of tailoring that for the digital asset space.
Yeah, and I'll double down or maybe follow up on that a little bit for the group here, because earlier we talked about financial audits. So if I pass my financial audits, am I good compliance-wise? Am I, is there
Yeah, I would say no. I mean, while there's definitely some parallels and related things between financial accounting, auditing the financials, and looking at your compliance posture, like having a very clean and robust financial audit is not a substitute for a compliance program. I mean, that just sort of verifies that you're accurately accounting for things from a balance sheet and income statement perspective. A financial audit would not take a look at whether you are assessing the financial crime risks of your customers and counterparties, whether or not you are screening people or entities against sanctions lists, whether you're looking for illicit activity and understanding direct and indirect risk. So it is really a separate domain, and so there needs to be focus in both areas.
Awesome. No, thanks for bringing that up. So, Ian, maybe enter the conversation with where Merkle science fits in the, broad space that is compliance, and talk a little bit about that.
Sure. So, in a nutshell, for everybody's benefit, Merkle Science is basically a blockchain analytics company where we specialize in monitoring wallet transactions in real time in order to give insights to our clients around, AML risks, sanction risk, and so on. And so it's really interesting to see how compliance has evolved in the crypto space because, for a couple of interesting points that Frank mentioned, when we usually think about compliance, some of the things you want to consider is what are the jurisdictions that I'm exposed to, right? What are some of the risk factors that I need to consider? What do regulators care about? And what technology do I have available to help me combat some of these risks? And the problem that we have in the crypto space is that almost all of these questions don't have simple answers, right? What geography am I exposed to? Well, most companies are decentralized today. They are exposed to many different geographies, right? Are you looking at where the customers are based, where the business is based? When you talk about wanting to be able to identify risk factors, well, the reality is the crypto space is constantly evolving. We're seeing new type of token models emerge every day. When we went from utility to DeFi to NFTs, all of this bring with it new types of risk that regulators themselves are still struggling to understand. And so if the regulators can't prescribe a bunch of risk factors for the industry, well, the industry is just going to have to do their best efforts, which is oftentimes very challenging. And that's why we have great consultants that we can rely on to kind of give us assistance. But then to the final point, when it comes to technology then, I think what's really interesting about compliance in the crypto space is unlike traditional compliance, where oftentimes you provide all these data sets to your provider who then does the analysis after the fact. With blockchain, we now have the ability for providers to independently do their assessment in real time and actually inform our clients before something happens, giving them the option to actually prevent money laundering rather than always being reactive.
No, that's a fantastic point. And it starts to get to one of the other questions I was going to ask, which is trad world versus, and you can just give your opinion here, but trad world versus crypto world is, I'll pose this question to both of you. Is it harder? Compliance, trad world versus crypto world? Is it easier? Is that a bad question? Give some colors to that.
Yeah, I can start. I would say it's not a bad question for sure. I think the answer to the question is it sort of depends on how you look at it. I would say in some respects, it should theoretically be easier to maintain a compliance program in the digital assets industry because all transactions are publicly stamped on the blockchain, even as you go from centralized exchange to another centralized exchange or to a decentralized exchange. Whereas in the traditional banking system, financial institutions often lose the trail. They don't have the visibility or the insight to what happens when a $50,000 wire transfer leaves their institution and goes to another major money center bank. From a holistic point of view, they cannot really follow where those funds go as they move around the financial system. the governments can attempt to piece that together through suspicious activity reports and some data that they're made available to them. But in digital assets and crypto, as funds are moved across a chain or even between chains, with the right type of expertise and tools like blockchain intelligence tools, one can understand exactly where the funds came from and where they're going to. So in terms of tracing, potential recovery, reporting, there's more transparency there. I would say in other respects, it's harder to maintain compliance in digital assets because it's a much less mature industry. The banks, the traditional financial institutions, have had their controls in place for many, many decades, and in some cases hundreds of years, and they've been able to course correct and evolve and refine their processes. The sheer amount of experience in the compliance industry is much greater in banking. And so with that massive head start, they have a lot of things working in their favor. In terms of what percentage of illicit activity happens in TradFi and digital assets, I mean, the truth is it happens in both ecosystems, right? I mean, criminal groups, rings, they will use the traditional financial system to launder illicit proceeds just as much, if not more than what the blockchain is used for. And so, the challenges are the same. I would say there's sort of that maturity difference, and then the transparency difference should work in digital asset industry's favor. It's just that there's a need for more clarity around regulatory expectations.
Gotcha, no, helpful. So go ahead, it seems like you might want to.
Yeah, no, I want to just add, I mean, Frank brings up, a lot of good points. I think theoretically, blockchain should make transaction monitoring easier. The reality, though, I think it's because we have access to so much data, it actually makes it harder, right? In the traditional space, like what Frank mentioned, because of the limited access that companies have, the extent that they're able to monitor realistically, practically, is limited. With blockchain, now we have insight such that, with our tools, if you're sending me Bitcoin, I can see who you bought it from, who sold it to that person, and so on. So compliance officers, for the first time, have access to all this data. Question is, can they afford to not look at it? And if they're required to look at it, well, there's not enough prescriptive advice as to what extent are they supposed to look at it. Do we look at 5 hops, 10 hops? How much is too far, right? And so I think what's really interesting about the compliance space in the crypto space right now is this convergence of how we're using technology to automate compliance. Yeah. So again, in the traditional space, compliance is usually done after the fact, right? Transaction happens, information is put to a vendor, risk score is derived. What if we can start thinking about building in compliance into smart contracts, where when somebody wants to do a transaction, the smart contract first has to call a provider, get a risk score of the beneficiary, and if the beneficiary, poses significant risk, the smart contract isn't even allowed to send those funds, right? So now we're actually having programmatic compliance. I think that's where, things are going to get a lot more exciting.
Yeah, no, that's awesome. So it sort of, let's talk about that. This concept of, it's a compliance back office, audit back office, some of these things back office versus, I think you're sort of implying building compliance into your product development, which I'll throw out something here for Frank to talk about. Where does compliance sit? Where should it sit? If there are any best practices on that, but what have you seen, work well, not work well, especially thinking about this concept of not letting it be after the fact, right? That we're trying to figure out how we comply. I'm creating some complex a product in crypto, and I'm building my product for my market, and then maybe 2 years later, when some rule comes out or I'm hammered, then I think about compliance. But I'm curious, where are you sitting when you're interacting? And this will come to you as well as Mark. When you go to customers, who's the customer you're talking to, and that sort of thing. So Frank, maybe you first. Where does it sit? Where should it sit? And then
I can start. In terms of what I see working well, it's leveraging or emulating some of the same organizational structures as you would see in traditional financial institutions. I know in many earlier stage digital asset firms and things like that, executives tend to wear multiple hats. You might not have as many sort of discretely defined C-suite roles. For example, a formal chief compliance officer, a chief risk officer. You have people who are sort of doing multiple of those things at the same time. Someone who's both a CFO and a CRO at the same time, things like that. So I think what the industry, eventually needs is more formal organizational units that have distinct responsibilities. So a compliance organization that sits in the second line, that provides effective challenge around what the business is doing from a product delivery standpoint, is able to define policy, is able to push back on the business if they are sort of operating in products in a way that creates compliance or risk challenges. So putting in those guardrails, doing periodic compliance reviews, defining or opining on what kind of transaction monitoring needs to take place, and also having a strong point of view on what are those escalation paths once something suspicious is detected. How do you run it to ground? How do you deal with the aftermath in terms of taking business actions based on what was discovered? How do you proactively report things to authorities, law enforcement, and so on? So I think the model really is to emulate what the traditional financial system is doing around compliance, having a formally named chief compliance officer or BSA AML officer within the organization, and then also building out the right talent. I think the industry could use a blend of folks that are compliance minded from both the crypto native world as well as traditional financial services, because there's just a wealth of experience there on how to deal with certain things when they come up, that having that seasoned mindset of someone who's been doing that for a couple of decades can really help when this industry moves so fast, right? Like in terms of incidents that could occur in the crypto world, like a week sometimes feels like 2 months in terms of all the things that could transpire. So having that blend of sort of older world or traditional financial services compliance expertise blended in with people who kind of grew up in more of a crypto native view of the world.
Awesome. And Ian, just really quickly, who are you talking to when you bring your product to is it founders, is it product, finance?
So to a large extent, it does depend on the size of the company. Like Frank mentioned, in the crypto space, you do have a lot of small companies where founders kind of double hat. But typically, the starting point is always the compliance officer. They usually are the one responsible for implementing a solution like ours. But what's really interesting is, when we engage with the Web3 space, more and more we're oftentimes seeing somebody from the development team or even the CTO themselves wanting to sit in to better understand how our technology works and how they can integrate it into some of the existing systems. And then more recently, we've also seen people from the risk team start joining in the calls. I think, with crypto compliance today being a little bit unclear, oftentimes a lot of the data that we have kind of gets passed over to the risk team for their consideration. And so, we've been having a lot of fascinating conversations with companies coming to us saying, hey, how can I use your data to better monitor, how my token is already being used in the ecosystem, right? Can you send me notifications if one of my NFTs is suddenly, being sent to a wallet held by a North Korean individual, right? I want to proactively seize back that NFT and protect my business reputation, for example.
Yeah. Awesome.
Yeah, one thing I wanted to mention just in terms of the design of a compliance program is, often, folks think that the main purpose of a compliance program is just simply to comply with regulations and sort of stay out of the crosshairs of some regulatory body so that you can continue to operate in a certain jurisdiction. I mean, to me, it's much bigger than that. It's really around how do you create the framework whereby your good customers who are sort of, engaging in the products and services that you provide for good reasons are protected, that sort of consumer protection aspect. How can they operate their accounts safely without, attackers or bad actors easily interacting with them or their assets, and then how do you protect your ecosystem and your infrastructure from being leveraged by bad actors for nefarious purposes, which over time do impact your reputation, right? So if your exchange, if your NFT platform, if your technology platform is seen as an easy tool for bad actors to use as a means to an end, that reputation does filter out into the broader community. So compliance is really around, how do you protect your ecosystem from, being used by individuals that will tarnish your reputation in the future.
No, fantastic. Ian, I'll let you close us out with just one final question. What's exciting to you? It could be to Merkle Science, it could be to you personally about kind of products being developed, right, in the compliance space for businesses going into the future.
So I think what excites me the most this year is the fact that more and more companies are beginning to understand how they can use blockchain analytics effectively. So most recently, we launched a product called Know Your Blockchain Business. It's basically a dashboard to help all our financial institutions monitor the risk of their crypto counterparties, right? So it's things like being able to track and exchange asset in real time and send clients notification if assets fall below a certain threshold that may warrant them to want to take a closer look, right? And I think as more and more companies start realizing the amount of data they can get independently just by using the blockchain, it's really going to open up a whole suite of new tools that will better serve this industry.
Fantastic. Well,
yeah, and then the other thing that fascinates me around the use of analytics in the digital assets industry is just you can analyze the data in a variety of different lenses to have a better understanding of the risk profile of who you're interacting with. So there's sort of the customer-centric point of view, like know what your customer is doing on the blockchain. Then there's the transaction monitoring itself. And then the other interesting piece is like knowing your asset or knowing your token, because there's a lot of risk by association in this industry. And so understanding, okay, what tokens are your customers holding? And then are there certain concentration risks there in terms of who else owns those tokens? And then you can kind of infer what the overall risk profile is, because some of those tokens that are out there, like 90% of the supply can be controlled by 10 wallets. And so not knowing exactly what the intentions of that token project are can create a lot of risk in the system. So that can help you evaluate whether or not to list a token, what additional guardrails you need to put around the exchange of those tokens, and so on.
Awesome. With that, thank you guys so much. So much to cover, I know, but really appreciate you guys helping us touch the tip of the iceberg here.
Yeah, thanks for having us.
Yeah, thank you.
Awesome.